Hi, it's Michael Farr at Farr, Miller, and Washington. The first quarter is just about over here on March the 22nd as I get to visit with you today. Markets have recovered after a very rocky start to the year and indeed are up 7.66% on the S&P 500 year to date. That puts the S&P within about 80 points of its all-time high. Investors were really fearful and greatly concerned as the market was correcting in January and into February, and they're not really concerned anymore. You remember, Americans hate prices when they're low and love them when they're high? Well, they're getting to feel content again. Investors are feeling better about the markets again. And when investors start to feel good, we start to worry. When investors start to have a new appetite for greed, we go in the other direction. We actually, as Warren Buffett says, begin to feel a bit fearful. There's a big move that has happened in the price of oil. Oil today is up over $41 a barrel. On February 11th, oil traded at $26.21. If you're saying to yourself, well, yes, I know that. It got kind of low and it went below 29 and 28 or somewhere in there. 26.11, okay? On February 11th. This is March 22nd, all right? We're 40 days later, and the price of oil has increased 58%. 58% increase, or decrease, or move in the price of a global commodity in 40 days. What does it mean? Do we really think that a 58%, there was a 58% mispricing in a global commodity like oil that was going to reconcile itself in 40 days? 58%. There's oil all over the world. There's a ton of oil. There's lots and lots of oil. The price of oil either now or then was off by 58%. Last time we saw this was in 2008. March 31st, 2008, the price of oil was $100 a barrel. On June 24th, it closed at $147.5, and we saw a 47.5% increase in that price of that global commodity. Made absolutely no sense. I'm going to suggest that this move in the price of oil does not make sense. You will see the price of oil lower. When I was asked, when oil was $28 a barrel on CNBC frequently, whether I thought oil was a buy, I said, you know, over the past 6 years or so, oil made a high of 147.5, call it 150, and is now below 30. So when something is in the bottom quintile of its trading range, I would be a better buyer than a seller. That wasn't to say that it couldn't go to 20 from 28, but basically you are in the lower quintile of the stock movement of a commodity is a better time to think about buying. Well, after it goes up 58%, not so good. Not so good a time to think about buying. So I'm issuing a caution on the price of oil. The 10-year Treasury is at 1.9%. That's kind of a middling range and seems fine after the Federal Reserve came out with a fairly dovish message. We were looking for a harsher message out of the Fed, and they said maybe they're only going to have a couple of hikes this year. I'm going to be surprised if we see one. I think we may see one more. I do not think we're going to see two. Stay tuned. There's a lot of disruption going around the world. ISIS has attacked Brussels this morning. I don't understand this senseless inhumanity between and among men. And it still upsets me, though you can see that today it did not upset Wall Street. Wall Street has accepted that terrorism is going to happen. It's not changing economics severely, and it's not changing earnings for corporations around the world in any significant way. So Wall Street has not reacted to this attack in Brussels, and that's been a trend for some time. So as we come to the end of the quarter, and we've seen a great rebound in price and a huge acceleration and appreciation in the price of oil, the message from Farr, Miller, and Washington is to be cautious, to be a little bit wary when others become enthusiastic. Money is very hard to make, and we think that keeping it is probably more important than making that extra last percentage point of return. So, cautious, make sure you know what you own, Markets go down. We learned that at the beginning of this quarter, and I'm afraid we'll be reminded before too long. It's normal. Markets go up, markets go down. This run in prices probably has gotten a bit ahead of itself. Caution is my word for the day. If we can help you with your portfolios or financial thinking and strategy, give us a call, please. In Washington, D.C., for Farr, Miller, and Washington, I'm Michael Farr.